I've seen many comments from people claiming that Bitcoin is a straight up Ponzi scheme. Is Bitcoin a Ponzi scheme? Is it a pyramid scheme? Or is Bitcoin maybe in an economic bubble? What do we need to know? And let's discuss. Hey everybody, I'm Gary Palmer Jr., you're you, and together, welcome to Minting Coins. So we have so much information, we have so much going on. I'm really excited that you're here to share the news and to share part of your day with me. And you know, these videos have been a ton of fun. What we're doing, learning about Bitcoin, blockchain technology, putting information together and sharing it with you. What I'm most excited about with Minting Coins is creating community and creating connection and really talking about cryptocurrency. A lot of what this show involves behind the scenes is a lot of planning, a lot of preparation, and you know, really going through the news, understanding what's going on, having to curate and then help syndicate through reporting and the commentary, what's really important. And not only is there all that pre-planning and pre-work involved in the whole process, but there's also the follow-up, the commenting, the communicating with people. Some people comment in the comments below. I welcome you to comment in the comments below and say hello and introduce yourself. Other people like to email direct in the email that's in the show notes below. Feel free to always check out the show notes, and I always add links for all the different articles that we review and the tools that we review, and there's more information about minting coins, and you can find that information below. Sometimes what we see, not just in the comments of my video, but other people's comments, and you know, maybe sometimes on Reddit or just all over the place, is that people compare or accuse Bitcoin of being a Ponzi scheme. And so sometimes these accusations come from the highest levels of traditional institutions. Sometimes these accusations come from, you know, just people who are learning or just learning about Bitcoin, or who are maybe experts in other areas and haven't really understood why Bitcoin is different and why Bitcoin is unique, and the market dynamics that surround, you know, what Bitcoin actually is. There's been a lot of misinformation, a lot of fear, uncertainty, and doubt that has confused the mass population, and it's done a really good job of just creating a lack of clarity. And so a lot of people think about Bitcoin as a Ponzi scheme simply because they don't understand it and it sounds too good to be true. And typically when something sounds too good to be true, it usually is. And you know, so there's just a lot of education that people need to go through. And I wanted to share that information with you, and I wanted to share that information with everyone out there, and just have a conversation about Bitcoin and just talk about Ponzi schemes and pyramid schemes and bubbles, and for us to take that information, compare and contrast to what we know about Bitcoin and blockchain technology, and see if we can just have a dialogue, go over this information, and then discuss more in the comments below. So with that being said, let's take a look at the market, and then let's go click around the web to talk about all of this, and let's discuss. Excuse me. So starting over at coinmarketcap.com, just taking a quick peek at where we are. Over here we have Bitcoin, the price $2,415 US dollars. Past 24-hour trading volume, we have 1.3 billion. So over $1 billion traded in the past 24 hours. Sounds like a lot of money, and the reason it sounds like a lot of money is because it is a ton of money. It's a lot of money, but still not a lot of money when you think about traditional banking investors and people whose job it is to invest large sums of money, and they have hundreds and hundreds of millions of dollars. And when you have hundreds and hundreds of millions of dollars, a few of these guys, $1 billion is nothing. A couple of these guys, $1 billion is nothing. So seeing $1 billion here is a lot for a lot of the world, and is going to start to get the interest of these higher level investors for them to want to put in even more money, because when we get into the tens of billions and hundreds of billions and trillions of dollars, that's where the largest institutional traders like to play, and that's when a lot of money will be coming into Bitcoin for trading purposes, in my opinion. And if all that money comes into Bitcoin, then we're going to see the value of each Bitcoin increase substantially. And why is that? So let's just go over a couple basic things about Bitcoin. So we have Bitcoin here. It's the currently the cryptocurrency that has the largest market capitalization. So this is the market capitalization, and that's the total amount of money, value, currency that's put into this token, this decentralized peer-to-peer token that nobody controls, that's borderless, that works all over the world, everywhere in the world, with or without internet. Even though we need the internet to process it, Bitcoin is an extremely robust technology that is decentralized. And so we're not going to get into all of that background. But going on, I'm going to click on Bitcoin. And so currently there are over 16,300,000 Bitcoins currently circulating in existence. And now a lot of people would say it's actually less than that, because many of these Bitcoins have been lost, private keys have been lost, they've been burned, which means that people have sent them somewhere to a Bitcoin address that is unretrievable. Satoshi Nakamoto has, who knows, a million or some number Bitcoins, and we're not sure where he is or where those Bitcoins are. I don't think that those have moved in a while, so we don't really. So it's the amount of circulating Bitcoin is less than 16 million. And then we have the max supply, which we won't see for 100 years. It'll take 100 years, more than 100 years, for all of this Bitcoin to be generated and to be circulating in the world. So right now it's limited to only over, between 16 and 17 million Bitcoins in existence. So if everybody in the world wanted one Bitcoin, if you saw this on the nightly news in America, and say it was on the leading story on all 3 or 4 or 5 major stations, and say they were talking about it on cable news, and everyone in America, of which there's over 350 million people, all wanted one Bitcoin, a real Bitcoin, where they would actually own the private key of their own Bitcoin, not some ETF, or not just, fake Bitcoin, like their own real Bitcoin from their own Bitcoin wallet, like in a Jax wallet or a Trezor wallet or a Ledger Nano S wallet. You can Google these things or click on the links in the show notes below. If you had your own, if everyone wanted their own, they wouldn't be able to do it. There's only 16.3 million. Everybody can't have their own Bitcoin because these are limited. They can't generate more and more and more just to feed the demand, right? If you wanted a cryptocurrency where you can just create an unlimited number of these things, then maybe that's Ripple. Maybe Ripple, you can just create more and more and more and continuously flood the market with more and more of Ripple tokens, and then you decrease the value because of inflation. Google inflation. Look up inflation on Investopedia and start looking up what is inflation. When more currency is added, in this case, if more tokens were added, then the value of each token would decrease. But we only have 16.3 million of these in existence. The current value is $2,400. And if everybody wanted more, then the value would go up, because when you go to the markets, So a lot of you guys watching do know this, but a lot of you watching may not know this. But if you go to coinmarketcap.com and if you click on any of the different cryptocurrencies, so we went to coinmarketcap.com, we clicked on Bitcoin, and then from the Bitcoin page, we were at this chart section right here. And now we moved over to the market tab. And so Bitcoin is being bought and sold on the Poloniex website. It's being bought and sold on BitThumb, OKCoin, Kraken, all these different places. Bitstamp, like all Bittrex, all these different places are buying and selling Bitcoin. So at Poloniex right here, this is the, you can see the volume, you can see the price per place, you can see the percentage of the volume. And so if everyone just came in and flooded all these places and just wanted to buy all the Bitcoin, it would go up in value. And to the people who are claiming that Bitcoin is a Ponzi scheme or that Bitcoin is a crashable market, every market is a crashable market. If someone purchases the majority of the Apple stock and then they sold all of it at the same time, you would crash the Apple stock price. And if everybody, if somebody had a lot of US dollars, right, like China has a lot of US dollars, and if China wanted to sell all of that debt, that they're holding, all those dollars that they're holding, and just instantly sell it all, there would be so many dollars in the world market that they would crash the United States economy. Now, if they did that, there'd be a lot of people in America without jobs who wouldn't be able to purchase all the products that are being made in China. And so it's not in the interest of China to crash the American economy when, our job is to purchase all these things that are being created everywhere in the world, is to spend our money and to spend our fiat and to deal with inflation. So the point of all this in summary is that this is showing us that Bitcoin is in a marketplace. Bitcoin itself, Bitcoin proper, is limited, and so it's a extremely finite supply that won't be increased. Even if there's a fork, one Bitcoin will become dominant. Let's say there's two Bitcoins and Bitcoin was the split in a worst case scenario. One of the two Bitcoins will become dominant, and there's still going to be just one dominant Bitcoin. If you own Bitcoin now, and then Bitcoin splits, then you're going to own both kinds of Bitcoin. And one of those Bitcoins will become the dominant Bitcoin. There's still only going to be 21 million Bitcoins ever. There's still only going to be 13.3 million right now. And so it doesn't change the fact that Bitcoin is limited and that Bitcoin is in a marketplace of which can go up or it can go down. So just as a background, I just wanted to go over all that, and then you guys can come over here and you can click around here and you can see links to the website for all these different coins. You can check out what's going on in social and what's going on in Reddit. It's really nice to get this high-level overview so you can get a pulse of the market yourself. You can learn about what's going on and stay informed, stay educated. Moving on, I wanted to go over the Ponzi scheme stuff. And so I'm going to go over to Wikipedia for this information and check out some of this information over here. I like Wikipedia as a source. I like that it is a community that everyone can come together and help make things better. And so it says here that a Ponzi scheme is a fraudulent investment operation where the operator, who is an individual or an organization, pays returns to the existing investors from the new capital that's paid into the organization by new investors. So this is not exactly a pyramid scheme, but it's sort of like a pyramid scheme. So we have a person or an organization, a specific person or an organization who takes people's money and then is giving those original investors their money back, and those original investors are doing well because as new investors are investing into this business and this idea, this innovation that's doing something supposedly amazing, they're just taking that investment money and paying back the original people So the original people say, hey, this is doing really, really well. Everyone, you guys got to invest in this too. And then those new guys invest, and they're just paying the previous people. And so this Ponzi scheme will go on for a long time until for some reason the Ponzi scheme falls apart, of which at some point it sort of has to fall apart. And if you remember Bernie Madoff made the news because Bernie Madoff was running a very famous, extremely large Ponzi scheme that defrauded many, many people, countless people, maybe, out of, maybe you can count the number of people, but there's a lot of people is the point, out of a lot of money. And that was a Ponzi scheme. And so a Ponzi scheme is run by a person or an organization who takes, who pays the old investors by taking money from new investors. And whatever the business is or whatever the idea is, isn't really a business and it's not really an idea. And so you're investing into nothing. And this is all a scam. This whole scheme is really, it's a Ponzi scheme is a Ponzi scam. Guaranteed to fail. There's a lot of other systems that are also like that, where they're guaranteed to fail. So, Ponzi schemes occasionally begin as legitimate businesses until the business fails to achieve the returns expected. And then, it can become a scheme if the operators are essentially being fraudulent. If the operators are committing fraud, lying about the success of the business and having numbers to back up that the business is doing really, really well, saying, look at all this profit. But all that profit is really new investor money. And then that new investor money, a portion of that is given to pay off, the interest of the people to just keep the whole charade going. So Ponzi scheme usually fails after the promoter vanishes with all the money. Or it fails when new capital slows down. Or it fails when there's a major shift or a sudden shift in the market or the economy that affects the whole operation as well. So that's what a Ponzi scheme is. I think we all can understand that. You trick new people to give you lots of money, and you take some of that to pay off the old people to keep the whole charade going. So a similar scheme is a pyramid scheme. It's similar to a Ponzi scheme, but it differs in different ways. If you're in Amway and you want to yell at me, feel free to yell at me in the comments below. But in Amway, if I was in Amway, then I would need to essentially sign up 2 or 3 or 4 or 10 more people to join Amway underneath me. And then each of those people would pay, $50 or $500, to me and to Amway. And then all of that money would go to, pay back sort of my investment of $500, and then I would make my money back. But each of them would be on the hook of having to sign up X number of people so that they can get their money back. That's a pyramid scheme. Ponzi scheme is way more fraudulent. So what I really wanted to get into is an economic bubble. And so, okay, so let's back up a second. Before we get into an economic bubble, let's talk about Bitcoin and Ponzi schemes. So Bitcoin isn't run or controlled by any single person in the world. And Bitcoin isn't run or controlled by any organization. It's not run or controlled by any group of people. It's not run or controlled by any sort of central authority or single authority of trust. It is 100% decentralized peer-to-peer technology that makes its own decisions because it's essentially a market. So Bitcoin is a marketplace. It's just a thing that exists that is limited, that has value for several reasons. It has value maybe because of the math behind it. It has value because of the mining, because people are spending so much time and money, mining it. It has value because of the security behind that mining. It has value because it's unique. It has value because people want it and they can use it for things. And so Bitcoin is a market where a Ponzi scheme, needs to be controlled by a person or an organization, and they're frauding people new money and using that new money to pay back old money. And so it doesn't meet the definition of a Ponzi scheme, and it also doesn't meet the definition of a pyramid scheme either. So where we do get closer is when we get into the area of is it a bubble? And so let's also go over this section about an economic bubble. So a bubble is similar to a Ponzi scheme, according to Wikipedia, in that one participant gets paid by the contributions from subsequent participants until an inevitable potentially collapse. A bubble involves ever-raising prices in an open market, for example, stock, housing, tulips, where prices rise because buyers bid more and buyers bid more because prices are rising. So it's buying for the sake of buying. So if, with the housing bubble, everyone was buying a house because everyone was buying a house. Everyone was able to buy a house, so everybody bought a house. And people were just buying houses. And then people who were selling houses were just selling houses because the people were buying houses. And then more people were buying houses because there were so many more people selling houses. And it was all so easy, and everyone was making a lot of money. Money, money, money. Bubble, 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 bubble. And yeah, that bubble popped. And that was 2007, 2008, that bubble popped. And so that was a bubble. So bubbles are often said to be the basis of the greater fool theory. As with Ponzi schemes, the price exceeds the intrinsic value of the item. But unlike the Ponzi scheme, there will be these other factors. And so real quick, as with the Ponzi scheme, the price exceeds the intrinsic value of the item. And so as the price of Bitcoin is rising higher and higher and higher, be this way, higher and higher and higher, is it really a bubble? Because or is the price truly exceeding the intrinsic value, or is the intrinsic value much, much higher than where the price is even today? And so it really depends on the utility, and it depends on a lot of factors. And since we can't predict the future, there's no way of knowing if that statement is true. And so everyone, that's why this is risky, and that's why, stocks and housing and cryptocurrency, it's all risky because no one can really predict the future. But we do want to understand the differences between a bubble and value, because a bubble is when the price exceeds the intrinsic value of the item. And so we just want to keep that in mind as we're watching the intrinsic value of Bitcoin and Ethereum, these different cryptocurrencies. So the differences, though, are that in most economic bubbles, there's no single person or group misrepresenting the intrinsic value. So with Bitcoin, we have no single person or group that's misrepresenting information. Ponzi schemes typically result in criminal charges. Other than pump and dumps scenarios in the economies that do not typically involve unlawful activities or even bad faith on the part of participants. So pump and dump schemes in cryptocurrency, which of course happens all the time, could potentially be an illegal activity. If they can track it, we don't know, but pump and dump is potentially illegal, unlawful. For cryptocurrency, I don't know if that's true, or to what degree that's true, and for other sort of investment type things, I don't know to what degree that's true. But other than pump and dump schemes, which could be unlawful, bubbles don't result in there's no bad faith from a participant. Therefore, when a collapse of a bubble happens, there's rarely criminal charges, because there's unless there's someone that's directly in charge of misleading people or falsifying things, then there's not going to be criminal charges just because everyone's throwing money into housing. Also, following the collapse of a Ponzi scheme, the innocent beneficiaries will be liable to repay such profits. So with a bubble, you lose your money, but with a Ponzi scheme, then if you received money from that Ponzi scheme, so the original investors of a Ponzi scheme, you might think, oh, with the Ponzi scheme, if I'm one of those original investors, I'm going to get paid because I'll get all the money from the new investors. No, the original investors that got paid, they have to, they're liable to repay the profits that they received from the Ponzi scheme operation. So, and then lastly here we have items traded in the economic bubble are much more likely to have intrinsic value than and still worth a substantial portion of the market price after the economic collapse. So after the economic collapse of the housing market, and a house went from being worth, $400,000 to $200,000, let's say. Maybe you bought that house at $400,000 and you're out, and it's only worth $200,000 now, so you're out, right? Whatever your ratios are, you're out money. But that house still is worth something, right? The house isn't worth $0. That house is still worth, $50 or $100 or $200,000, whatever the case is. So in a bubble, there would still be some value after the crash. Even if Bitcoin was in a bubble, when we saw, 2013, and it went all the way up to $1,000 really quick, and then there was all that horrible situation with a central exchange getting hacked in some sort of way, and then losing everyone's money. It wasn't Bitcoin that was hacked, it was a central exchange that was hacked. All that bad news, bad press, all that FUD crashed that Bitcoin price all the way down, to how much? $100, $200? And so that was a crash. Was that a bubble? Was it a bubble or was it all just bad news? Hard to say. But that it went up really high. It crashed. Some people lost money because they purchased very high, and then after the crash, it came back up a little bit. It wasn't worth zero. And as we all know today, if they would have held on to that, where are we at? 5 years later, all of that money would be doubled from the high point then, and they'd be doing, really well right now, minus, buying at the worst possible time. So that's why I recommend dollar cost averaging and only risking what you can afford to risk, and educating yourself as much as possible, because that was a really horrible situation that happened with those folks. So after a Ponzi scheme happens, then if Bitcoin was a Ponzi scheme and then it was just run by some company and then it all crashed, then they're saying, say it was a fake token. So people have made, there's other cryptocurrencies that are absolutely Ponzi schemes. That's an important detail. Some cryptocurrencies, that's what they're doing. It's a company and they're just claiming that it's some cool blockchain technology, but they're just robbing people. They're just stealing their money. That's not what we're seeing with Bitcoin, though. So if an investor trading on margin, so when you're trading, you can use leverage. Leverage means that you can borrow other people's money to make trades. And so if you're trading on investments, then that creates additional risk for you. And a lot of people lose their shirts and their houses, and they lose a lot of wealth by trading on margins and borrowed trading. So that's really risky. Actually, I want to show you one more thing. So there was this article out of Cointelegraph from Max Kaiser, and so he's been talking about Bitcoin a lot and being really pro Bitcoin, and he's talking about how Bitcoin cycle is going to repeat to $100,000 and beyond. I know we keep on seeing all these crazy predictions. This isn't his first time. He's predicted before in the past that Bitcoin is going to be going to $500,000, $1 million plus. He's remaining bullish, and he tweeted out this prediction pattern, and he showed, hey, look here. this is when Bitcoin, Bitcoin's a bubble, it's crashing, it's going to go back to $100. And then it happened again. Hey, Bitcoin's a bubble, it's a fad, it's a scam, it's going to be going back to $1,000. And then they're predicting this cycle is going to repeat over and over again. Bitcoin's a bubble, scam, fad. It's going to crash back down to 3,000, and then it's going to crash down to 10,000, and it's going to crash down at 100,000, and then, you know, I think his logic continues from there. Really, really interesting. And so, what do we have here? So then we have RT repeating comments from CNBC analyst that Bitcoin would enter a downward spiral, bottoming out in January 2018. We will see the bottom at the start of January. Let me see. So that's like less than a year away. So, and then the publication soon changed tack, this time highlighting comments from the Saxo banks. We talked about this recently, Van Peterson, who originally had other predictions that were very correct about the $2,100 price way back in December, who's also forecasting the $100,000 in 10 years. So we have these predictions coming out. We do know that the market goes up. We do know the market goes down. And we do see that pattern repeating of the market going up and the market going down. And so with the Bitcoins being limited and with the demand increasing and with all the news that we're covering about all these different countries and all these different companies and all these different Ivy League educational institutions and all these different programs and now these even banks mining Bitcoin. I repeat, banks mining Bitcoin. Is it possible? Will we see? Could we see? How likely is it that we'll continue to see this market go up and the market go down and the market go up and the market go down? Very interesting. So, wow, that was a lot of information. Thanks for sharing this time with me. Thanks for going over this information with me. What do you think? What do you think about Bitcoin? And do you think Bitcoin is a Ponzi scheme? Does any of this information change what you think about Bitcoin? Do you even think that Bitcoin is a Ponzi scheme before you started watching this video? And do you have the same opinion now, or do you have a different opinion now? I'm really interested because I don't want to lose, I wouldn't want to lose my money, and I don't want any of my friends or family, and I don't want you to lose any money. And none of this is financial advice. This is just personal opinion, and I'm just figuring out how to get my way through the world. And if I don't want any of us, to lose out in by taking a bad risk, and I don't want any of us to lose out by not taking a good opportunity. So it's really important for me to have information, to share information, to see what you think about this information, and I want to know, what do you think? So please comment if you have a strong opinion, because I want to know what you think. And also subscribe to this channel if you'd like to be notified when we have more videos coming out, because we have more videos coming out. We are on a roll. We have about 1 video a day or 2 videos a day, and we're looking on seeing how we can make this even better for you. So feel free to say hello. I want to know who you are, and introduce yourself. Be part of the Minting Coins community, and we'll talk in the comments, and we'll talk in the next video. And until then, I'm glad we're minting coins.